Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Karel Citroen, Managing Director and Head of Municipal Credit Research at Conning, to discuss the economic health of states and municipal credit quality. Karel, it's great to have you with us. Welcome to Trade Talks.
Thank you for having me.
You got it. Why is the outlook for states' economies declining for the first time in several years, despite a strong year in 2022?
Yeah, you're right. Tax revenue growth was very strong last year. Sort of across the board, it increased about 10% on average for states. But we do think that this growth will come down this year and next year. And with inflation still being high, this will keep expenses elevated and pressure state budgets. And if the consumer pulls back as well, which we haven't seen really as of now, this will add another layer of stress, hence our declining outlook. I kind of do want to point out that said, states' balance sheets are in their best shape since before the great financial crisis, with reserves at all-time highs and much improved pension funding ratios. So it's not all bad.
How do you evaluate the economic strength or credit quality of each state?
Yeah, and the State of the States report that we just published, we kind of look at a dozen metrics. When you talk about economic conditions, this includes looking at GDP and employment growth, but we also focus on GDP per capita and unemployment rates. And I do want to point out that our rankings are relative, though, meaning it compares states to each other and are not absolute. So they're not necessarily calling each state's credit quality.
Why is Texas the #1 ranked state this year, and how does it compare with #2 ranked Florida?
Yeah, Texas and Florida took the top 2 spots this year. Both benefited from a strong economy and healthy level of population growth. Florida had a much stronger housing market than Texas did, but Texas, on the other hand, had a much more robust rainy day fund. And where we are now in the economic cycle, this could be a benefit. That said, both states see their respective tax bases grow as people move in, and as of now, their economies seem to be able to provide jobs for these new residents. So that's good.
What challenges do states like California, New York, and Illinois face?
Yeah, contrary to the other states you just mentioned, those states tend to have a relatively large amount of economic debt, and their reserves are below average as well. But they're also falling behind in areas like population growth, and their tax climates don't rank favorably either. Now, on the flip side, sort of one common factor they share to support their credit quality is that they have a relatively high personal income per capita level. So they're wealthier states.
How will decreasing inflation impact state credit quality?
Yeah, we saw that inflation drove up the prices of goods and services these last couple of years, and that in turn translated into much higher sales tax revenues for states. But the flip side of this is that with inflation dropping and all else being equal, their sales tax revenue growth will come down as well, potentially turn negative.
I think it's also interesting, too, when you think about population trends, as you had mentioned before, more people moving to Florida and Texas, and you have to start to think about what does that mean in terms of infrastructure support and what their budgets look like? They're going to need the infrastructure to support all these people that have been coming in. Do you think that could potentially impact what those rankings look like?
Yeah, absolutely. We had seen those states that have benefited from people moving there. Their tax bases grew, and not necessarily immediately they had to provide for services like schools or infrastructure. But that might turn now that that residency base is there to stay. And with inflation being high and those projects tending to get more expensive, and also just the housing prices going up, potentially that will turn people away from those states. So it's interesting to see if those population trends are here to stay, or potentially we see a bit of a reversal. Generally speaking, we have highlighted this in our report for several years now. We have seen people move to kind of these Mountain West states and the Southeast, in addition to Texas.
Which leads me to my next question. Were many of these trends in place prior to the pandemic, or were these accelerated because the ability to work in a hybrid fashion now?
Yeah, I think high level, these trends were there prior to the pandemic. I think what you saw during the pandemic is that people were able to sometimes move as simple as within the state. Let's say they went from New York City to upstate New York, or they went from a larger city in the Northeast to a more rural area. So I think that's what you saw predominantly, sort of these urban, suburban trends. That is slowly reversing. I believe, but I think high level, you're still seeing people move to the areas I had just mentioned.
All right. We appreciate the insight, Karel. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you for having me.